Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 22nd of January. It is a Tuesday, and well, there was some profit taking. The sellers came in early. We had a fair amount of selling the first half-ish of the trading day. Went fairly flat the second half, had a little bit of a late day rally, still closing in the red pretty much across the board. But a little bit of maybe short covering or bargain hunting, I don't know, coming in at the end of the day. Before we get into our indexes, I hope y'all had a nice 3-day weekend and got back into the swing of things here today. A handful of earnings coming out this evening, including IBM. I did not have a chance to see what the reports were. The initial response seemed positive, but I didn't have a chance to see what even the numbers were. So we'll have to see where that one takes us. Capital One, Zions Bancorp, as well as Navient Corporation here this afternoon. And then another round here tomorrow before the market opens, including Procter & Gamble and Comcast and Abbott Laboratories. So some fairly good-sized companies coming out between now and tomorrow's open. We'll keep an eye on that. Good afternoon, Abel, and good afternoon, everybody. Hope everybody had a wonderful 3-day weekend. Didn't get as much snow as I did. It snowed pretty much nonstop all weekend for me, but such is the life in Utah. So we will take a quick peek here. Unlike previous days where we kind of gapped, one way or the other on the open and kind of fought back, we saw that, a couple of weeks ago. We gapped down on the open today. Here we have the S&P 500 and really tested that. And maybe it was kind of one of those things, from a technical point of view. We tested early the gap from Friday that faltered. And we saw this in the Dow Jones as well, where that intraday gap was not able, or that pre-market gap from Friday wasn't able to hold here on the intraday today. And then we just basically never generated any short-term buy signals until potentially at least the very end of the trading day, spending all day long below the short-term moving averages. As you guys know me, I use the 9 EMA as my shortest term moving average. And we really just kind of spent the whole day using that. We'd consolidate for a bit. Eventually, the 9 would work down into us and push us down. We consolidate a little bit. The 9 would work down, push us down. We consolidate. The 9 would catch up, push us down. So we really kind of went that way pretty much all day long. Last, hour, 45 or so minutes of the market day, you did see some buying action come back into the market. So it wasn't, a huge, free fall or anything like that. If you look at just some shorter term charts, it was early, gap down first half of the day, and then we really kind of flatlined throughout much of the rest of the trading day, as is really the first day that we've seen selling in quite some time. The percentages are big, down 1.42% in the S&P, 2% in the NASDAQ, over 1% in the Dow Jones. And so the percentages, they're not, they look big. To me, they look bigger than they actually are, I think, at least. As we look at the S&P on the daily chart, this line here I'm going to get rid of. That was just to kind of illustrate that gap being a point from Friday. Really didn't do too much technically wrong to change, at least in my opinion, where we are on our daily charts. We still are above the 50-period moving average. We still have a rising 9 EMA. So while we did see some short-term signals develop on shorter term time frames, they haven't worked their way over, at least according to my signals here on the daily chart just yet, at least across the board, able to hold that 50-period moving average here in the S&P. The market needs a pullback. Whether you think it's a pullback or something more, I guess that's going to be up to each of us to decide for ourselves. But we needed some selling, right? We've had a pretty nice run to the upside, have not seen a red day for quite some time, today notwithstanding. So, this was inevitable, right? We knew that there was going to be a pullback. Didn't know it was going to be today, of course. Over in the NASDAQ, really similar situation. We breached the 50 on the intraday, rallying up and closing kind of right on top of it by the time the day was done. Again, much like the S&P had that little late day, last 45-minute or so day run to the upside. Whether that was real bulls coming in, bears covering their shorts, probably a combination of the two, we did see that kind of across the board in a lot of our sector ETFs as well. And good afternoon, Andy, and great to see you and everybody else as always. So again, I'm going to be watching, the 50 kind of that first line of defense, this little trend line. As long as I have this rising 9 and this rising 20 working to me, I'm not really looking, at this through very bearish eyes. I do think we have seen some shorter term signals develop. So I am mentally prepared for a little more selling. Whether or not I get that, only time will tell. But we have seen, we haven't turned over. We saw a little bit of, action on that 15-minute chart at the end of the day on the S&P. Similar action over here. But if you look to an hourly chart in our indexes, they're working into trend lines, which is a positive, but they're below pretty much everything except their 200-hourly moving average. So haven't started to see any buy signals generate just yet. So I'm, watching, for it to continue to sell at least a little bit more, at least mentally preparing myself for that. But again, I don't think we violated trend or major levels of support across the board. And so I'm just kind of looking at this as a little bit choppy. I think I'm open to both sides of the trading spectrum this week. If there's a good bearish setup, like MO, who broke a major level of support, I'm open to that. If I get some interesting pullback candidates or breakout candidates to the upside, I'm definitely open to that too, at least based off of today's price action. I don't think that this is something that says, Frank, you need to be super aggressive or careful on either side of the coin right now. Over in the Dow, looks a whole lot similar, doesn't it? So kind of fitting that same MO, closing above the 50, breaching it on the intraday briefly, still above those shorter term averages, above a fairly steep trend line, but this has been kind of a V-shaped type recovery. So we're going to get that type of a trend line when we have this. So not a whole lot different over there. Over on the Russell, interestingly, we kind of closed right at the end or at this previous support zone. And if we come into its intraday, you can kind of see that it put up a little bit of a fight, much like everything else. To me, this is a very important price on the Russell. We've seen, history here before. We know this was a major breakdown point. It was a week's worth of resistance when we worked back into it. I don't necessarily am going to say you have to go bearish if that breaks, but I personally, if this support holds out, that's going to be kind of that one more log on the fire bear signal on the Russell. I think this is a fairly important price point, approximately 1450. Above that 50-period moving average is kind of the gauge I will be using. We did stop and we did hold there. So as you saw on the intraday, a little bit of buying, not quite as maybe happily as our other indexes, but we did see that buying to close the day over in the Russell as well. But on the Russell, that one's close, in my opinion. That is going to be kind of the first one, if we continue to generate more sell signals, probably the first one to go, at least based off of what I will be looking at. So definitely a good day of selling in the market. Over in the material sector, we had, of course, closed above that falling trend line here on Friday, working back down below it here today. I really think it's in an okay spot, whether we're looking at it from a pullback point of view or a resistance point of view. Continue to sell off. I think above here is going to be where the breakout buy signal is for me. If we pull back towards this, into these moving averages, into this trend line, I'll be open to it because we've already breached that trend line on one occasion. So those are going to be the areas for me going into the rest of the week that I'll be keeping an eye on, either the upward trend line or the break of Friday's resistance. I do think, like you said on Friday, I do think if we can take out this resistance, this will be an area that I will like because there isn't a lot in our way in the short term, but we're going to have to break it first, right? We're going to have to test it first. So we're not there yet by any means. And hello, Patricia, and hello, Shirley. Great to see you guys, gals, I guess I should say. I hope you had a great weekend. Energy really sold off quite a bit. We saw a fair amount of selling in crude today. Energy really dropping. I don't think it's done enough for me to call it bearish, but it's probably one of the areas that could sell me the most in just another day or two. We didn't take out the short-term average. And for me, one of the key things I'm always looking at is, where are we at in those short-term averages, above the 9, below the 9. So until I get a signal, below a close below the 9 EMA, it's very unlikely I'm going to change my overall market posture. I might become a little more conservative, if you will, or turtle up, as we say in the gaming community. But I'm not going to really consider, if I'm staying above that, short-term average, I'm not going to consider it a tremendously large sell signal, or vice versa if I'm going the other way. So that's kind of a gauge that I personally like to use. Did see, quite a bit of selling. Again, energy is kind of a tough one. All the charts are kind of, don't look great for bearish retracements, but are working into some, fairly significant overhead, as we know on the ETF here, the XLE ETF. We've got a lot of history, just around that 65 mark. This area is not an area I love right now, to be honest with you. If we close below that 9, I might change my opinion on it, but I will need to see at least a close below the 9 EMA to go, into more of a bearish mindset. Right now, I'm kind of on I'm glad I don't have to make a call train when it comes to energy. So luckily, we never have to make a call. Saying I don't know is a perfectly legitimate call. We don't have to trade anything, right? Over in financials, held up okay today, down a little over 1%, working into that high from Friday, falling just short of that. Really, the numbers haven't changed. 25 on the bullish side, 26 is our first level of resistance. I would be personally happy to see a little bit of a pullback in the financial sector. I think that could be an area that I would like to look at things from a bullish perspective. Personally, a pullback's not a bad thing. We saw a lot of upward movement in the financials, particularly the banks, responding for the most part fairly positive to earnings last week. So a little bit of a struggle at resistance. For me, 25, 26 are going to continue to be those primary zones. I don't think the chart over in the financials did anything to be, have any reason to be a little concerned. Whereas materials, hey, we did break, back below that trend line. I don't think it's necessarily a huge deal, but it is definitely something. Over in the financials, I don't have to have that internal debate. It didn't do anything wrong, in my opinion, at least as of yet. Very similar, I think, over in the industrials. We've had a very solid run over there, mimicking, kind of the S&P and the Dow Jones, kind of working towards that 50. I don't think we actually reached the 50 on the industrial ETF today, but we got very close to it and rallying back up. We're getting that 9 EMA working back. We still have those trends. And so, again, those trends are still intact. It's going to be hard for me to dramatically change my market posture. Again, kind of like, what I look for is always the space. So if we pull back into this trend line, probably, that's going to take a few days in that scenario. The 20 should be catching up to us. We're going to have some room between that hypothetical support level and hypothetical resistance at 70. If we, see buyers, use today selling as an excuse to buy going into the rest of the week and break things out, some room to go before our next level of resistance too. So again, depending on how this thing shakes out, I expect it to be one of those areas where I have room to kind of work with, which you guys know me well enough now to know that is kind of my general philosophy. What has the most room between support and resistance, or the break of resistance to the next level, just the way that my brain works. But again, nothing was really immune, with the exception of maybe utilities here today. They did end up closing in the green, I believe, after their rally. So not by much, but they were positive. Over in tech, again, kind of working into that, seeing a little downward movement at approximately that trend line. Very similar, right? This is kind of what happens when everything kind of does the same thing. All most of our charts tend to have a very, very similar look and feel to them. Still closing above the 9. We did test that on the intraday, kind of use that as the intraday support level. I think from a bullish point of view, if you're looking at tech as a whole, I think the break signal is going to be a lot better than a pullback. I don't anticipate liking pullback opportunities as a whole in the tech sector myself. I anticipate this would be more of an area, would be open to bearish trades as long as we are below this this resistance level. I think the signal, if we're looking bullish, is going to be a clean break there. I'm willing to pay a little bit. I'm not willing to say we've cleanly taken out this trend line with today's price action. Might not be fair. Market gap down on the open. Technology got in with everything else and sold off, but it is there regardless, right? And so for me, I'm going to take more of a cautious, bullish approach to the tech sector. I think the signal above resistance is going to be a lot better than any hypothetical pullbacks. If I get that hypothetical pullback, just going to have areas, whether it's financial, industrials, whatever, that I'm going to feel better about personally. So that's how I will be viewing things. And I'd love to hear what you guys have to think. So, when we're done here, if you want to throw a comment on the YouTube video, let me know. Let us know what you're thinking too. It's always helpful to get multiple eyes on things, right? I certainly always love looking at charts, even if they're not my charts. Over in the staples, I don't like it. It's not done anything other than, sell off with the market today. We did see some pretty good upward movement off of the intraday lows. This is kind of a defensive area. We did, of course, break that 52, which is something I was watching for personally, breaking through that on Friday. Back below that here today. Again, I can't 100% put my finger on why I'm so leery of the staples right now, but I continue to feel that way. Right or wrong, only time will tell. Closing back below there, just a little bit of a failure of that break. I still think back above 52 is where you have to be from a bullish point of view, in my opinion. I don't necessarily think I would be bullish. I think I'd be more so neutral in that scenario. But as long as we're below 52, I have a hard time trusting anything overall bullish that I'm seeing here. I think this is an area that I would be very picky personally. If I see breaks, on things like, say, a Coca-Cola, hypothetically later in the week, if I'm seeing some upward movement in the sector ETF and I see a clean break of resistance, I could be okay with a short-term swing trade if that's what I'm going to be looking for, if and when that happens. But across the board, I'm just having a very difficult time getting all that excited about the staples sector right now myself. And I know that might just be me, and that's okay. Utilities, interesting. We did take a run at resistance, took it out on the intraday, albeit briefly, really sold off of that, and then late in the day caught up in the market rally to close in the green. And it was the last run, right? Here's our last 45 minutes in the market, particularly the last 15 over in the utility sector, working back towards that resistance. Again, for me, as I've said many times, that has to give out before I'm willing to be looking at it from a bullish point of view. I could easily be convinced to look at it from a bullish point of view if we can break and hold that break for more than a short time on the intraday. But I will be very mindful as we work in towards that old trend line, that 50-period moving average, going to be pretty close to one another. If we start to see some sell signals here, it's not my cup of tea, but I would completely understand people looking to go bearish on utility right now at this resistance level. And so I'm still waiting for a break. I'm not much of the type of trader that likes to buy at support and sell at resistance for new entries. In a sideways market, I guess I should say, I typically prefer to wait for it to break one way or the other. I know not everybody feels that way, though. And so if you are kind of a betting on resistance, betting on support trader, we're kind of right there, right? If resistance is going to win, probably about time to start looking for the sell signals that you're looking for in the event the resistance does push us back to the downside. Shirley, we'll take a peek at this SPY chart here in just a moment, but very quickly before we do, our old friends in healthcare actually held up pretty nicely technically today, working down into that 89, catching that as the intraday closing, only down, 0.69%, so nothing too dramatic. Most importantly, kind of holding that price point that we've just seen that time and time again on this ETF play out. Again, we have lots of earnings coming out in this sector this week, so that might have something to do with the way that this, the ETF looks at the end of the week. But for today and the price action on the ETF, I think you have to be very satisfied that we were able to hold that support pretty cleanly. If you kind of look at these guys, much like the overall market, but every time, we worked into that 89, buyers immediately stepped up to the plate buying in. So it's not just me, I guess, looking at that $89 mark. If that were to falter, I wouldn't call that a bearish signal. I would like to see it hold if I'm looking at this from a bullish point of view, of course. But I maintain that this is an area that I continue to like for the bullish side. I'm not quite sold on the discretionary sector just yet, but I'm really interested in how we respond to this old trend line. Does this old trend line that was, an issue as far as resistance go, turn into maybe a little bit of a support zone? It's going to line up with this old support that we had that little week-long intraday floor and ceiling develop last week. I'm very interested to see what happens there, because we are seeing some pretty positive things for the most part over here. Not a lot of major levels of resistance ahead of us. We have lots of little ones kind of every $2 for a while on the ETF, but nothing substantial in my opinion, at least. So this pullback in the discretionary sector can be one that I hate and can be one that I'm very interested in. Today, I'm not all that interested in it because I want to see it actually pull back into that and respond one way or the other. So that's going to be something I'm keeping an eye on myself. I understand that if folks like this sector as a potential area from a bullish point of view, I don't think you want to look at it bearish until we break support. If we were to break support, which is a ways away right now, not to say it couldn't happen this week, I don't think I will be looking at it with bearish eyes as a whole until that breaks. That will be the test for me. Over in real estate, a lot of movement went nowhere. Just continuing to kind of hang around. It seems like it needs to take a little bit of a break. It's not really selling off. It's not really moving up. There is still room to run, in my opinion, for the most part, but it might need a little bit of a pullback or a little bit of a sideways movement that we've seen over the last couple of days before it's ready to go. Again, as you can see, pretty much everything is still kind of holding those shorter term averages. Most of them, they're longer term averages too, right? That's why, for better or worse, I'm not looking at this as a significant sell signal in the market. Those things get taken out tomorrow, and of course they could if that's the way it wants to go. I'll probably be feeling a little bit differently for sure. And over in the communications services, I still don't trust it. I still am not willing to say it's broke out. This is an area that I'm not looking at with bullish eyes right now at all, right or wrong. I know I'm not, not everyone agrees with me ever, but I know not everybody agrees with me specifically on XLC right now. And that's okay, of course. I'm not sold that it's turned around just yet. And it's just going to have to convince me. And it hasn't. We did kind of, work right into that trend line, on Friday. Maybe it was a break, maybe it wasn't, depending on your line and depending on you. Today, we have worked back into it. Very interested in seeing how it responds. Again, if we are able to break back through that and now have a point of reference in the form of Friday's high, that can get me on board. I'm not so much as an ultra bear within this sector. I'm just not a bull at all within this sector until I am convinced that it's broke that trend line. And certainly I don't think you can say that here today. Over on the healthcare sector, Shirley, yeah. So I mean, really, as long as we hold this trend line, and ultimately what I expect to happen, Shirley, is in the days to come the 20 to work its way up and kind of catch up with the 9 EMA. So I expect this will continue to push up a little bit. So that will kind of be the pullback zone I would be looking at, somewhere in the 88. But as far as, the moving averages, they may end up being a little bit different places, right? If this has a huge red candle selling into that trend line tomorrow, of course, I'm not buying it, right? Better or worse. But this trend line can give me an idea. I'm going to watch the 20 as it works its way up. If that's, and again, if it sells off too quickly, that may be an issue. But if we have a little, we sell off, somewhat gradually, that probably will have the opportunity to catch up. So yeah, I mean, I would say really from a purely technical point of view, surely anything above this old support level could be an area this was a little bit, in my mind, of a breakout point right here. So while I don't necessarily expect it to pull all the way back to that recent breakout point and take another and look to bounce off of that, as long as it does, I'm interested. I'll be honest, I'm interested from a bullish point of view. So that's going to put us right around 86.50 or thereabouts. 87 is kind of a good number as a reference point, though I would agree with you for the most part in that regard. But as long as, this break right here does hold, because if we just bring this chart right here, and this is the only world that we know, so we know nothing else. This is the only chart action that we have to work with. We ran up, we pulled back, we broke out. So if we were to pull back to this, that wouldn't appear to me, at least, to be a big deal if I'm just looking at this chart within this time frame. So yeah, I do agree for the most part with your numbers there, Shirley. I know you also brought up the SPY ETF, and you're looking at 256. Again, very similar situation. I probably would not be jumping into the SPY necessarily personally. Again, you never know for sure. We'll have to see when we get there. But very similar. This old resistance, it happened quickly, right? And you can argue that it didn't have a chance to really pivot because of how fast it happened. But we do know that this 250 and change right here was a form of resistance. It did push us down in price before ultimately giving out on the breakout back on the 4th. So this could be, a support area that I would be looking for. Again, I don't necessarily expect it to pull back, and I don't really expect I'd be interested in buying the market if it did pull back that far. Personally, I'd be much more interested in things on an individual or even potentially a sector level than the broad market personally. But again, very much like the healthcare ETF, I'm going to identify, where I think is still holding things up. Now, again, to get there, we, break the 9. We start to see some short-term signals develop if we do pull back that deep. So that will be something worth keeping an eye on. But that will be kind of the area that I will be watching for. But again, I'm not saying you're wrong to be thinking like this. I'm just saying I probably would be more inclined to be looking at things more specifically, individual sectors, or probably more likely individual stocks in there. So, and yeah, that's going to line us up fairly close to a 38 fib to boot. Interesting. So that's I'm not much of a Fibonacci guy. I'm a lot like old Coach T. So, but I never hate when it lines up with something I'm looking at anyway. So, that would be very interesting that would put us there. So hopefully that gives you some ideas. We'll be following along if we do pull back that deep. There probably will be some selling opportunities along the way for us to be looking at as well. Of course, the market sold off today, fairly, especially by today's standards over the last couple of weeks, pretty aggressively. So no surprise, we did see a little bit of fear work back into the market over in our friend the VIX. So typically that is, of course, the way that is going to play out. Back and forth over on the dollar. I think you can say we're back in that neutral range, fairly comfortably right now. At least I'm comfortable saying we're back in that neutral range. And I think that's the best way to be looking at that overall right now. We did have a little bit of a break, whether you were calling it the 96 or, the 90, 550 zone, but that did fail. The problem is we've got lots of us, but we are continuing to see short-term momentum type of things, right? We, took out old support / new resistance, took it out another level. We're back above the 20. The 9s had an opportunity to start rising up. So it looks within this range right now. I'd probably lean more towards the bullish side, but make no mistake, for me at least, I would call myself neutral and with a hint of, with just a side of bullish if I wanted to grade it one way or the other. But really not a whole lot going on for the most part technically over there. Our old friends in natural gas, we'll go with them first. We were, wishful thinking last week, right? Hoping to stay sideways. They did gap, of course, on the open, closing below that support zone here yesterday. Almost was tradable, almost. So I didn't personally do anything with it. But we've kind of watched that old support, old resistance zone. At least I was watching for that to be the support. It kind of played out that way last week, breaking it here yesterday, and then really filling up that space here today. Still, some pretty bearish signals, but I still don't know how you trade it as a swing trader right now. It's still very volatile. Just again, as I've said before, it's got to simmer down before I'm comfortable with it. But I do find it very interesting that, somewhat predictably, the funny thing is, in a lot of ways, it's been predictable. It's just been super fast, right? When we broke one level, we typically work to the next. We've just seen it in the form of gaps or all in one candle or trading within the trading range, pretty wide range, all in one day. So it's been a pretty wild area, which is why I think it's not a great swing trading place to be right now. I know I'm not alone in that line of thinking, but I do like that it's kind of made sense working back and filling that space up. If we're looking at it from an intraday level, we can kind of watch that breakdown point potentially develop as a level of resistance to be keeping an eye on. If we can work back into, below this old breakout point, we can spend quite a bit of time trading sideways, several months back. We got a ways to go before we're there. Like I said, it's fun to follow natural gas for me right now, but it's certainly not practical, I guess. So it's not actionable. Maybe a better way to put it. Just a lot of popcorn watching over in natural gas. Over in crude, we came very close, and I think you could probably call it close enough to that old resistance. We didn't quite make it to 50 to 55 or anything like that. But as we approach that resistance zone, that of course we do know is a level of resistance. We kind of started to see it turn over, went a little sideways, broke some intraday support, and did see a little bit of selling. Really, in my mind, nothing to see here right now. Again, the prices are 50 and 55 for me. I know for a lot of you feel somewhat or very similar, depending on probably you. If you're trying to trade within this range, you're probably already here, or you probably don't have the risk to reward, at least according to my rules, to justify a swing trade. And so I still think we continue to watch, the 50, 55 range. Sooner or later, it's going to make up its mind, and we will, of course, be there when that happens. Of course, the market, having a rough day didn't hurt gold's chances, but we started to develop some little intraday signals, started to develop them before today's selling, where we actually, if you look in on an hourly chart, we had a double bottom develop, closing above short-term moving averages, while simultaneously, draw a line here to make this a little clear for anybody who might be more new to the markets. We closed above those short-term averages and at the same time above the previous resistance level. In my mind, short-term, that was a pretty bullish, candlestick on an intraday time frame at least. So we did see some buying step back in. Off of that, it didn't hold exact number at 1280, but as we all know, it very rarely holds that exact number at 1280. Seeing some nice movement off of that. We're going to want to watch this old floor if we're doing anything. And I think, like I've said many times before, I think the break of 13 is going to be a much better signal than trying to work in it for a swing trade within this trading range. But if we are trading within this range, I do think a good idea is to keep an eye on this old floor, see if that ultimately decides to act as a resistance level or a potential breakout point. So certainly a little bit of upward movement finally in gold after some pretty reasonable selling to close last week out. And over in silver, somewhat similar. We're kind of at that old support zone. We've seen a couple of nice tails develop on our daily candlesticks. Much like gold, you kind of saw it bottom out, break back above averages. So it's starting to show some short-term bullish signals, which is good because there's some space. If these signals give out, whether we're talking about silver or talking about gold, we have some room. There is room to go to the downside. I don't think it would be bearish necessarily. Maybe on an intraday level, it would be, of course. But from a swing level, I wouldn't be bearish if these support zones give out. But there's really not a lot to hold it up. new things may develop. But there's some room, 1260 over in gold, around $15 over in silver. So, if these support zones don't hold, and I do think it was important that we saw some of those short-term buy signals develop, because it's really easy to fill up space when there's no buy signals, right? So, from a bullish perspective, at least, they needed to see that. Keep an eye on those zones. Again, best to treat things like zones, especially when we're trying to be super specific on silver, for goodness sake, right? It's hard to give it an exact number, for an intraday level, but keep an eye on that. Definitely bought back here today. I don't think we've seen any swing buy signals that would, put me at ease just yet. But we did see maybe a little bit of bullish momentum come in after, a fair amount of bearish momentum to close out last week and get this week started. So definitely, if you're a bull, you want to see that. So ladies and gentlemen, that will do it for the market recap today. But interesting day. We come back from a 3-day weekend. We gap on the open, and then we just really never got going, and I don't know how much of it is real bad news. I pay very little attention to the headlines. I know what they were. I just usually don't care about them because when market's selling, it's always trade fears, right? It's always slow down. When it's going up, those things just magically disappear. I don't really believe in that. I know a lot of people don't, but definitely whatever the reasons were, once we started moving to the downside, we just really had no interest. There was no interest in across the board, at least, buying into things. And so the last part of the day, those last 40 minutes or so, where we did see some buyers step in, and that was it. So for the buyers here today, so my plan is to continue. Most of these things haven't broke support levels or anything major, in my opinion. So I'm going to look at this more as a pullback as a whole. Still very open to bearish trades, unless I start to see things break support. I'm going to kind of be looking at it more as a stock pickers type of an environment. I'm not going to be surprised, or maybe a better way to say it, I'm mentally preparing myself for a little bit more of a pullback. Maybe I'll get one, maybe I won't, but I wouldn't be surprised if there's a little more room to go. We'll just have to see how the futures market responds. Maybe can give us a kick one way or the other. So as always, recap gang, it's always my pleasure. Always great to see you guys, and I always appreciate your time. Always fun to hang out with you guys. It's funny how just one extra day seems like so long when I was getting everything set up today. Man, how long has it been? It's been 3 days. Goodness, you get really used to what you get really used to. At least I do. I'm a creature of habit for sure. But it's always my pleasure, guys. And I hope you had a great day both in and out of the market. If you're new around here, be sure to subscribe to the channel and hit that notification bell so you can be alerted to any new videos or live streams we're doing over here. And be sure to follow us over at Tackle Trading on Twitter. If you do the Twitter thing, we'd love to have you over there with us as well. If you enjoyed the market recap, it's always helpful and appreciated if you do give it a thumbs up, just to let us know that it is helpful, let YouTube know that it's helpful. It just makes YouTube happy. And, I guess making YouTube happy is a good thing if you're on YouTube, right? So with that, ladies and gentlemen, thank you so much. You guys have a wonderful rest of your day. Happy trading, and I will see you tomorrow.